Looking for hidden value in today's housing market chaos? At Insightful Value, that's our specialty, and today we're diving into American Homes 4 Rent, a real estate stock that's been quietly falling out of favor with Wall Street. This review is purely for educational and informational purposes, not financial advice. If you appreciate straightforward analysis, like this video and subscribe to the channel. American Homes 4 Rent is one of the largest publicly traded single-family home rental companies in the United States. The company owns and manages over 59,000 homes, primarily located in high-growth suburban markets with strong demand and limited supply. Their strategy is focused on long-term ownership, professional management, and scalable operations. Essentially, they're trying to institutionalize the experience of renting a home, something that's historically been fragmented and inconsistent. So why is the stock down? Since early 2022, shares of American Homes 4 Rent have trended lower, hit by rising interest rates, a cooling housing market, and investor rotation out of real estate investment trusts in general. Higher interest rates mean more expensive capital, which reduces margins and makes future growth projects more costly. Meanwhile, home prices have cooled in many regions, putting pressure on asset values. From a value perspective, the stock now trades at a discount compared to its recent historical averages. Its price-to-funds from operations ratio, a key valuation metric for real estate investment trusts, has compressed significantly, suggesting that investors may be overly pessimistic. The company continues to post solid financials. In its latest quarterly earnings, rental revenues were up year over year, and core funds from operations remained steady, indicating resilient demand and operational efficiency. Dividends have been growing slowly but consistently. American Homes 4 Rent initiated dividends in 2013 and has been increasing the payout gradually. Today's yield sits around 2.5%, which may not be eye-popping, but it's backed by steady cash flow and a conservative payout ratio. That leaves room for future increases if conditions improve. Margins are strong for this kind of business. Their net operating margin typically sits above 60%, thanks to economies of scale and centralized management systems. Debt levels are moderate and well managed, especially for a real estate trust, with a fixed rate structure that helps shield against rising rates in the short term. Why consider this company now? Because despite the macro headwinds, American Homes 4 Rent operates in a space with long-term structural tailwinds. Homeownership remains out of reach for many Americans, and the shift toward rental living is more than just a short-term trend. If rates begin to stabilize and housing demand remains firm, this stock could rebound quickly. On the flip side, the risks are clear. Persistent high interest rates could continue to compress valuations, and slowing rent growth might challenge future profitability. At Insightful Value, we break down undervalued companies like this one to help you see beyond the noise. No hype, no complicated jargon, just data and perspective. You can find more insights like this at insightfulvalue.com. If you found this video useful, hit that like button, subscribe to the channel, and check out more on insightfulvalue.com.